One firm dared to dream bigger, challenge limits, and change transportation as we know it in a world where innovation drives us ahead. However, what occurs when the path to achievement encounters a few unanticipated detours? Today, we examine the startling truth behind Tesla's recent roller coaster ride and delve into the fascinating story of the firm that not only ignited the stock market but also our highways. We are delving deeply into the thrilling world of Tesla's stock decline, revealing the unseen elements, solving the puzzles of the market, and revealing the untold tales that have contributed to this crucial turning point. Come along with us as we sift through the marketing and uncover the realities that even the strongest can encounter. But first, be sure to like and subscribe to Tesla Stock News before we go any further. We can now move on with the video after saying and doing that. As you may have noticed, some investors are changing their strategies these days, diverting their funds away from the stock market and into bonds and cash. As you can see, Bank of America strategists have been investigating this, and our good friend Jared Blickery from Yahoo Finance is with us at the New York Stock Exchange to provide us with further information. This week, at least in terms of inflows, not many also were looking at stocks. However, there have been significant inflows into cash money market funds, which have totaled $145 billion this quarter. Michael Hartnett from B of A is discussing this week's flows, which are higher than those of the previous quarter, which is also significant. Treasury bonds or government bonds have had significant inflows this year, totaling $127 billion with an annualizing record of $206 billion anticipated. He stated that, although there isn't much enthusiasm for stocks, at least not this week, there appears to be some attention being paid to healthcare in terms of money flow. When it comes to inflows, cash money market funds are the true stars. They've brought in an incredible $145 billion so far this quarter, which is quite the haul. Oh, and there has been some discussion on the money flow game from Michael Hartnett at B of A. The inflows this week appear to be happening much more quickly than they did last quarter. Not to be overlooked is the magnificent arrival of treasuries, those dependable government bonds. With a substantial inflow of $127 billion so far this year, they're taking center stage. At current pace, the entire project might potentially reach a record-breaking $206 billion. Let's now focus on Tesla, the main attraction of the program. The Federal Reserve's interest rate policy, the business's Q3 profits, the excitement surrounding the Cybertruck, and the EV revolution are just a few of the many variables influencing the stock performance of the company. But let's concentrate on the last one, which is the complete transition to electric cars and the profound changes it's making to the transportation landscape. It's a complete metamorphosis, my friend, not simply a passing trend. When you give it some thought, electric automobiles are positioned to surpass the reliable internal combustion engine vehicles. Why? Well, it's a combination of factors, including our shifting perspectives as customers, the amazing technological developments, and the reduced environmental impact. All of this points to a rapid advancement in the field of electric vehicles. Now, when it comes to Tesla's ride, they've been selling those cars like crazy in the first quarter of the year, and they've been able to achieve some success in part by using some very cunning pricing techniques. We're all interested to watch how those cars continue to sell as we head into the later half of the year and the interest rates decide to take a break. You know, Tesla has been able to compete by offering a competitive premium pricing, and as they have increased their output, they have taken a substantial share of the market. In the commercial sector, however, it is sometimes necessary to gently prod the market to accept novel ideas. There has been movement in the car market lately, and it appears that price reductions may be tapering down. It appears as though they are veering away from that assertive strategy. Experts predict that those price reductions are almost complete. The talk these days about who will have the most market share is what's grabbing my attention. There's a lot of activity going on here. In terms of technology and pricing, Tesla has been a real hustler, staying ahead of the curve and winning market share left and right. They are a force to be reckoned with in the market because of their significant advantages in terms of cost reductions, production, and vehicle design. Furthermore, they have the opportunity to stir things up with more price reductions if necessary. You can be certain that they have something special planned for it, even though it may not take center stage for the remainder of the year. They are not your typical auto manufacturer. Their stock has recently been taking center stage, and they have been seeing rapid development. This company has been setting record after record, and they have more in the works. Should they continue to strike the correct notes, the stock price could quickly crash. Now, Tesla has long been a prominent figure in the automotive industry. People are curious in the potential earnings from investing in this automaker. You know, it's a gamble. Certain market variables have the ability to predict future stock values with a degree of puppetry. Future jump when it comes to autos, we're in full shift mode. Major cities and even entire nations are announcing that in a decade or two, they will be bidding adieu to vehicles with traditional combustion engines. As a result, the market for electric vehicles is exploding, and governments everywhere are pulling out all the stops to lower the cost of electric vehicles. It seems like they are throwing EVs a red carpet treatment with tax incentives, rebates, and reduced registration costs. In this EV circus, Tesla appears to be the heavyweight champion. Imagine the money that will come in if they can seize the initiative and put half of all EVs on the road in the future. And that only relates to vehicles. They don't even discuss other secrets they may have. I assure you that Tesla is the only player with a chance to win this. And let us acknowledge those who deserve it. Tesla has been the EV revolution's rock star. The innovative technology of EVs combined with Elon Musk's allure have people talking about them like never before. Do you recall the period when EV charging was fraught with problems? Fortunately, a significant amount of money has been invested in growing the charging network, making the situation less problematic. In addition, as more EVs are driven, production costs are decreasing, which is good news for consumers concerned about cost. Let's return our attention to Tesla's financial runway now. They earned a cool $18 during the first quarter of last year. $8 billion in sales, a significant 42% increase over the previous year. Yes, they had a slight decline in the second quarter as a result of some delivery hiccups, but even in that regard, their production output was far higher than that of their rivals. They significantly improved their car delivery business in 2021, up 81%. Now let's calculate some figures. Consider a scenario in which Tesla achieves around half of Musk's projected 20 million vehicles by 2030. In such scenario, a stock price of almost $3,120 per share might be in store. If the average price of a Tesla vehicle in 2030 is $60,000, the company might make a tidy $60 billion from sales. Once you factor in 15% from other exciting areas such as robots and batteries, you have an impressive $90 billion. After adding up all of their sources of income, some careful math puts the total at $3,120. Hold on to your hats. If Musk's ambitious plan materializes and they sell about 20 million cars by 2030, Tesla may reach an astounding $1.56 trillion in gross revenue. Yes, you did indeed hear that. Additionally, assuming their non-automotive businesses generate roughly 30% of that revenue, their stock price might soar to $11,700 per share. It sounds like a fantasy land. I know. Stranger things have nevertheless happened, but remember, they are all only informed assumptions. Tesla has a few exciting things planned, like the Cybertruck hysteria, the Q3 earnings, and possibly more benevolent interest rates. We might be witnessing a golden age of investing if these conditions are met. Hey, though, always finish your assignment. Do research, and never forget that your personal expectations and boundaries count. Let's hear your ideas before we conclude. What do you think about Tesla's involvement in the revolution of electric vehicles? Do you picture them coasting to dominance, or are there obstacles in their path? Regarding their stock prospects, are you excited or are you hesitant? What is your most ambitious forecast for Tesla's future, by the way? Please share your thoughts in the section below. If you appreciated this in-depth look, don't forget to hit the like button. Don't miss out if you want to remain up to date with everything Tesla. Click the notification bell and subscribe to Tesla Stock News.